G'day, Brandon. How you doing?
Hey, how's it going?
It's going well. It's pretty crazy world right now. How's it
Yeah,
all happening
crazy
on your
times.
side?
Yeah,
Surviving?
going pretty well. Yeah, surviving. That's it. I'm kind of lucky in a sense that I make YouTube videos, so nothing's
Yeah,
stopping me from doing that. I'm at home every day anyway, so
yeah.
it's actually not too. My life isn't too disrupted, thankfully. But yeah, it
You
is
don't
a bit of
have
a
kids,
crazy time.
obviously. You don't have
No, I
kids.
don't have kids. Nah, I
As
got
you can
nothing
see,
to worry about.
as you can see, I'm working from home, so it's amazing situation right now. It's really like quite
Mm,
worrying. I just had a mate reach out to me, and they had 40 people 2 months ago at work, and now they've got nine. It's just
nine. That's
it's really rough out there. So
it's really interesting to see how quickly it hit the markets too. It was like instant. It was like as soon
yeah,
as this just came, I reckon as soon as it left China, this problem with the virus, just markets just started tanking straight after that. And it's surprising to see how quickly it's happening too. Like just how sharp, how steep.
yeah,
I looked at a chart the other day where it was like comparing the rate of decline in the stock. Obviously it's jumped a little bit now, but
yeah.
it was comparing the rate of decline in the markets now versus the 0809 crash,
Oh yeah,
and it was happening far quicker now than what it was back then. So yeah,
yeah.
big blip that I've seen in my investing lifetime. So yeah, it's interesting to experience it.
Yeah, no, I remember 0809 quite clearly. I started my
Yeah.
career at Optiva in '07. So
Right.
got the end of the bull market, and then stuff started unraveling. I
Wow.
mean, that was a real structural shift in the in the markets and the way banks priced, and also this is literally just it's taken everyone by storm in a matter of months. It's yeah, it's
Mm,
pretty interesting. I mean, there's a lot of pain out there. It's really sad. Let's
yeah.
hope we can all pull through.
Yeah, definitely. It's kind of
Yes.
weird thinking about it like that because you see the markets go down and I'm mostly like, oh, this is such an exciting opportunity, like opportunity, opportunity, opportunity. And then you're like, actually, two sides to the coin. Like there is a reason that the market's going down. That's because business is going to be affected and people are going to lose jobs. And then you're like, oh, should I actually be getting excited about this? Maybe it's a bit insensitive of me.
Yeah, I don't know. I mean, I think the market's a really important part of the ecosystem. Ultimately, there are companies out there that are pushing for vaccines. Businesses
Yeah.
need capital. If you don't have them, my take is if you don't have the market, you don't have a key part of the ecosystem to fund the future growth of businesses and to allow entrepreneurs and people that are trying to move the world forward to get access to capital. So it's an important
Yeah.
part. The companies that are looking for vaccines, they're listed. Some of them are listed companies, and their funding and their research is driven by capital market. So it plays a really
Yeah.
important part of that ecosystem. So, and that's my take on it. Obviously, like capitalism's one part, but it doesn't always work. But in a sense,
Mm.
that's what it's trying to achieve. But no, I mean, obviously that's the preamble, but it's just really good to have you on and chat and already hear a
Yeah,
little
thanks
bit
for
about your take.
yeah, thanks for inviting me on. It's
Oh,
good to
absolutely.
be on and having a chat to you again.
Yeah, no, it's great. It's great. I mean, Brian from our team marketing's been pushing this, and it's been like a great idea.
Mm.
He called it stocks and socks. So I just want to confirm that I've got my finest on. What do you got for? Oh, wow, classic bonds. Well, you're
Classic bonds.
good Aussie, good Aussie. Well, mine are a gift from one of the nannies that looked after my little kid, my middle child. She's
All
Spanish
right. Yeah.
actually, so her family's going through quite a bit. But
Mm.
they're tacos. So I mean, that's obviously Mexican, but she picked them up. She knows I like those sort of like higher than ankle socks. So
Right.
I'm representing today.
They're more exciting than my socks.
Yeah, no, you're also good old classic. You're supporting a great Australian company. Good on you.
Yeah, I'll take it.
Um, no, I think that the way we want to run these and just to chat is just to see what's happening. I mean, obviously you've got like a
Mm.
really strong user base. So, they obviously love what you do, and we do too. So I just want to get your take on what are your listeners and watchers? What are they doing? What are they seeing? What are they asking about the markets right now?
Yeah. I think the main thing that I'm getting, I guess a lot of my content's geared towards helping people start out in the markets. So the main questions and kind of comments that I'm getting at the moment are, how do I start? That's pretty classic.
Yep.
And I think there are a lot of people in that boat because we've seen just stocks go up and up and up and up, and maybe people are just feeling like stocks are getting just more and more overvalued just generally, or the market's getting more and more overvalued, and we're never going to get an opportunity to get in at a good price. And then all of a sudden it's happened so quickly, like what we were saying, that people are like, oh, it's kind of taken them by surprise. They're wondering, how do I get into the market? And I feel like what I'm saying to people at the moment, even from my limited experience, is before you get into the market, just something that's logical, but for some reason people kind of forget about it, is just make sure that you know what you want to achieve when you're going about investing. Because I feel like one of the biggest traps people run into is they start out and they get this opportunity and they just think, I've got maybe 5K on the sidelines, let's just get into the market. And, I'm just going to be an investor, but they haven't really taken the time to think about what they want to get out of their investing. Like, what's their investing horizon? Do they want to be invested for, 12 months and they're trying to make like 20%, or do they want to be invested for 10 years and they want to set themselves up for maybe later in life? So that's probably the main thing I'm seeing, is just saying to people, look, before you start, even though you might be presented with this opportunity, is just take a step back, maybe take a couple of breaths and just think about what you're actually trying to achieve.
And I think the one thing I take from that is I learn a lot, is that investing is a craft. It takes time to learn.
Yeah.
You got to develop it. And also you've got to invest your personality. Someone who's got great patience and doesn't want to be overly active may want a more passive approach and just, has a 20, 30-year time horizon. Whereas someone who wants, who's, can't handle the ups and downs all the time, wants to be in and out just so they can move from investments to cash back to investments. You've got to understand who you are as a person. Do you get a lot of those things?
Yeah, I guess so. It's definitely, you do have to think about, from my experience, you have to think about what you want to achieve, or what you feel like you could realistically do with your investing, because a lot of people just look at the market. Go for it. I'm not a coffee drinker.
No, it's what it's come to. I'm listening intently. Sorry.
I got classic water. What was my train of thought there? Oh yeah, that's right. Sorry. It's just a lot of people, they see the market and they know that the stock market is a great way, reliable way to build long-term wealth. But they don't really like reading annual reports or looking at businesses and yada yada. And it's important to realize that there's still something that you can do and benefit from the market, like what you're saying, more of that passive investing approach, where basically your strategy is not to beat the market by picking individual stocks, but it's just to be invested, be literally participating in the market and just trusting the long-term, historical returns of the market, trusting that, over the next 50 years, Australian or American or wherever, Australian business will perform well like it has done the last 50, and kind of follow that, just participate and follow that trend over time. Or you could, if you're someone that's super interested and you're like, oh man, I want to look into, Facebook, or I want to look into Apple or something like that, then you can also be a long-term investor investing in individual stocks, but you just have to be prepared that you have to spend a lot more time kind of reading annual reports and really getting an understanding for what you're investing in. That's another classic rule of investing. Don't invest in something you don't understand. But it's super interesting. Like, that's the thing with investing, is there's so many different strategies. There's probably a really reliable, proven strategy no matter who you are. You just got to find it.
Yeah, I think that's what's so amazing about the markets, is there's something for everyone. It doesn't matter the way you see the world. If you think this is going to pass, like right now, and you think, look, I just think that Apple's got X amount of cash and it's going to be around forever, and this is just an amazing opportunity to buy. Like, some people think that, whether it's right or wrong, is you can do that if you feel like the world's going to go down further, and I feel like there's an opportunity for me to hedge my position because I've got long equities and I want to get in a position that protects me against that. You can do whatever you want. And so the most amazing thing about the market is, like, you're in that coliseum, and if you're in there, you're participating and you're learning and you're developing, and you're not just like a spectator. You're actually in there developing your craft and just being part of that ecosystem, and just being able to meet people and talk about it. It's a little bit like sport in a way. Just just adds a little bit more to your life. So that's what I love about it, just that camaraderie and that sense that you're always developing and challenging yourself. And it doesn't matter what your strategy is. I mean, there are tennis players that are, that hit the ball, they just try to hit winners straight away, and there's guys that try to grind the other one down. So it's much like the investing. It's like you can be long-term, short-term, you can swing trade, you can momentum, you can trade options. There's so many different ways to do it. There literally are a lot of options. So that's what's so amazing about, I think, your community, is that people are coming in through the door, and then they can choose different paths. So do you sort of see people progressing once they start with you and get into the market, and they find, actually, my niche is in this, or my niche is in that? Do you see that?
Yeah. Definitely, for sure. People, there's probably positive and negative reasons why it's good and not good to be an investing-based YouTuber, is because there are so many different options. And of course, everyone's a keyboard warrior, and they love to tell you which is the right approach. But I think that's important, is to remember that with something like investing, there are so many different approaches, and you might start on one approach and then realize that it's not for you, and you move to a different approach. It's for me personally, I probably, in hindsight, incorrectly started out being very much an active investor, probably before I knew really what I was doing. Not saying that I know exactly.
Is that because of your personality, do you think, or just because?
Yeah, I think maybe it was just, you read a couple of stock market books, and they fill you full of confidence, because that's what sells in a book. and maybe you kind of think you're invincible as a young 20-year-old man.
You are, right?
And then I just made a couple of investments early on that I really didn't know enough about. I didn't really understand what I was getting myself into. That's a big rule that I follow now. And so my investing style has changed. I kind of realized that, okay, I better learn to do this properly. So I started myself up partly passive investing to be kind of that fallback cushion in case the active investing doesn't work out. Then I really dug in, learning about Warren Buffett's kind of way of going about it, with the whole understanding the business, finding businesses with competitive advantages, strong management teams, and valuing them, and looking for margin of safety prices and going long. I learned a lot more about that, and that's kind of, I still follow both those strategies. Like, I've still got that ETF market tracking portfolio, and then I've got that more active style Warren Buffett kind of model that I follow as well.
And what are you doing now? Are you doing anything personally? Are you doing anything in the market?
Yeah, I've been buying a little bit over the last month or so. I'm really focused on just watching companies that I feel like I can understand, or that rest in my circle of competence. And being still relatively new to investing in the grand scheme of things, that circle of competence is not like Warren Buffett's, where he can talk about any sector or industry that he wants. So I'm focusing in on a few companies, and some of them have hit prices that I'm comfortable with in the last little while. Some of them haven't, as well as that. So I'm doing kind of that side of my portfolio, and I'm still buying, market tracking ETFs as that really long-term, set yourself up for retirement, passive investing approach. So yeah, I've been doing a little bit, but mainly buying. I don't really sell. I'm a net buyer of stocks. That's my mentality.
I think most people are. Any stocks in the US for our audience that just maybe interested in having a look? Not necessarily financial advice, but what are you doing?
Definitely not financial advice. But I mean, most of the companies that I look at are over in the States, just because for me, that's where my circle of competence rests a little bit more. That's where my interests lie a little bit more. I have no interest in mining companies or banks, which is very much, the Australian economy. But you throw a company like Facebook, I'm pulling my phone out of my pocket every 5 minutes on Facebook. So obviously I've got a little bit of knowledge about that company even before I look at the financials. You think about a company like Disney. I mean, I've got Disney Plus over there on the TV, and I watch a show. So I've got that little bit of baseline knowledge about, say, a company like Disney or Netflix. It's those kind of companies, or Adobe. Like, I'm a YouTuber. All my editing, I do it on, Adobe Photoshop and Premiere Pro. So naturally, just from my interests and my general circle of competence, I tend to look more to the US. Not because I'm making a big bet on the US over Australia. That's just where my interests are.
Yeah. Great, awesome.
So thanks for having a brokerage platform that allows me to invest in US stocks.
Well, this is exactly
I appreciate it.
No, absolute pleasure. I mean, my background's pretty similar. I was in the US at Optivad trading firm, and Was obviously doing some more sophisticated stuff on the option side. But when I was there, Netflix was just, was on its tear, and everyone was like, "When's this thing going to fall?" Or that, I was ordering DVDs at the time to my place in Chicago. Facebook had listed towards the back end of my trip. Amazon was getting delivered. It's just like, and I got back to Australia. I was like, "This is just ludicrous." I mean, how am I? Like, I tried to open an account. It was like $60 a trade. It was like paperwork here and there.
It's horrible.
I remember,
I opened
if I come from a trading firm as a partner in a trading firm and I can't even do this, then how's an investor off the street going to make it happen?
Yeah, I was looking at I think ComSec International, and when I first started out investing overseas in the US, I think their brokerage, international brokerage was like $50. It's like $50 for one trade. Pay that on the way in and the way out, and that's brutal, especially for a beginner that realistically doesn't have $1 million that they're looking to invest, and it's pretty rough.
Yeah, no, that's
low cost brokerage, love it.
So we're here pretty much. Yeah, absolutely.
Yeah.
Oh no, great. Well, obviously, your audience is obviously probably pretty interested in what we're sort of seeing on the platform, and
definitely. That's one of the questions.
Yeah, go for it.
Yeah, that's one of the questions I was going to ask you actually is from behind the curtain over at Stake, kind of what are the trends that you guys are seeing at the moment with the markets being super turbulent? We've seen like a month now of them tanking and a week of them really picking up. What are you guys seeing? Where is the money kind of flowing into and out of across maybe different industries or stocks, or what are you seeing?
Well, first of all, it's not much of a curtain. It's my study.
It's a wall.
It's a wall. It's a wall and a door and a couple of chairs. We see so many different things. There's been a few thematic changes, but overall, people are doing what they always do. So there are people that will historically buy and buy ETFs. I know a person that says, every time the S&P drops 5%, I'm just going to put in. Like everyone's got their own strategy, which is what we spoke about. So that's great.
Yeah.
But the real thematics we're seeing is a movement towards some of these ETFs that allow you to generate returns when the market is a little bit more turbulent. A lot of people are either hedging a position, so they're buying inverse ETFs. So these are exotic products, so they're definitely not for everyone. They're quite complex in their pricing, so I just want to disclaim that one. So when the market falls, a lot of these ETFs go up in value. And on the Aussie and New Zealand market, and even in markets outside the US, there are sort of these options in the local markets. They're not very liquid and they're not dynamic. And then you've got the currency hedge. People want to be they want to be long USD and they want to trade on the short side of the market. So that's been a big movement. We've seen, it's honestly insane. We've seen a 30 times increase in some of those names, which is just out of this world.
Wow.
While at the same time, we've only seen, this is since Jan 1, we've seen a 2 times increase in net investing into like the Facebooks, the Apples, the Netflix, the FANGs pretty much, the Berkshires. So it's been a real increase in those. That's the general thematic that I could probably say is pretty clear. And there's buying out and selling. People that have had this thing like the market's too hot, I'm going to get short here, and selling out when the market really just took a dive in February and March. March mainly. But then some people are picking up stocks like Zoom and Teledoc and DocuSign that are making 52-week highs because they're structured to succeed during these sort of conditions. And there's just a lot of people picking the eyes out of stocks at the moment. It's pretty fascinating.
Yeah, that's very interesting. One question I also had, because one thing that I have no experience in is the short-term aspect of investing, the kind of more trading focus of investing, because all of my positions, I'm always a long-term investor. So one of the questions that I had from you, knowing your background and experience, is what's the general sentiment from someone that's a short-term investor or a trader when the market is super volatile like it has been? Is it an environment where traders go, oh, I love it, like this is good for us traders, volatility, or is it a time where most traders kind of take a step back and just wait a little bit? What's the kind of overarching strategy with that?
Yeah, I mean, look, there's so many different types. It's like an investor could be passive, it could be semi-regular. I actually like to look at everyone as a trader, because ultimately you need a place to trade. So I consider you a trader, and this seems to be a subset of how often you do it. Because ultimately, if you're an investor, you still need a place to trade. So,
True.
My background, I was at a high frequency trading firm, so that may give you the sense that I'm short term. But my personal philosophy is like, I don't have the patience of a Warren Buffett. I wish I did. I've definitely got a lot of work to do and a lot more meditation to get under my underneath. But So, I'm probably too hyperactive to maintain that balance that you need to be a super long-term investor. I wish I had it. So my approach is generally momentum-based. So I want to ride the wave for a period of time where the strength is on that side. So, that's my personal view, but a lot of people may look at the market now and go like, even in Australia, they saw Afterpay hit $8. They're like, that's ludicrous, I'm buying it. And then the next day it's, within a week, it's trading at more than double. So they made 100%. So a lot of people that would say, I'm buying Afterpay at $8, even though I'm talking about the Aussie market or $9, whatever it is.
Yeah.
All of a sudden it's trading at 20, may just be like, well, that's enough for me, I'm out. So there are people that play these markets. I generally like to sit in cash and just wait and see. I don't.
Okay.
It's a little bit like cricket in a way, or baseball. Like, you just got to wait for the right thing to, you play everything on its merits in a way. So that's why I look at it. But everyone's
wait
different.
for it to be in your zone.
Yeah, exactly. So everyone's a little bit different. I mean, as a brokerage, you see everything, and that's everyone's right. We should never judge how they trade or invest. They've really got to do what's best for them. So, but when volatility comes, people are more active. There's more opportunities being thrown out, however you look at it. Whether it be like the market's going further south, this is worse than it is. I think the market's underpricing the risk of this thing. Or the market's gone loopy, like this will recover because this will be over in 12 months' time or 6 months' time, whatever it is, and then things will be back to normal. Or a vaccine can come out quicker. So everyone's got different opinions. And that's what's so amazing about the market, is that exactly the same event can trigger so many different reactions. And to be able to the way I look at it is try to be the eye of the storm while all this panic is happening. It's just like being laser sharp about what you're trying to achieve. And that's a skill. So that's what it's about.
It is mastering your emotions.
I think being a psychologist would be the best background for investing.
I would definitely agree with you actually there. It's remarkable how you can have a strategy set on paper, and when, things start hitting the fan, then all of a sudden that strategy, for one reason or another, it's just your emotions, it just goes out the window. And all of a sudden you're caught up in this media, hype or fear or whatever. And it's just remarkable. That's actually why I tend to say to people that are new, just if you're going into the markets, just know what you're trying to achieve. Because if you have a strategy set before you start, then at least when you're hearing these articles or media headlines and news reports, then at least you can kind of go back to your strategy and kind of see through it a little bit. But another thing I wanted to talk to you about with your experience as more of a momentum trader, what are some of the indicators that momentum traders tend to look at to help them kind of watch that flow of money into and out of stocks or sectors or industries?
Yeah, I mean, obviously price, you look at a chart, I don't know the time and inclination to go read reports. They definitely help if that's the way you invest. But for me, it's really just the price and volume. I like to see price moving in it. I like to see price moving up and volume moving, whatever direction it is. Price moving in one direction and volume matching it. So when there's up days, is there volume moving with it as well? Are people actually buying to force it up, or is it literally just lack of liquidity that's moving the stock up? So what we saw really recently was the market tanked. If you looked at the futures volume and the equities volume, the market tanked on really big volume. And then the last week it trickled up. Volume was actually really low. And on the day that it hit its high, in terms of recovery, the volume was at its lowest, and then it just came straight back down. So it just shows me the strength on the sell side. So those are the sort of triggers that I look for. But everyone's different. People look at, moving averages, which is basically just a derivative of those things anyway. MACD, all sorts of different, people look at, I don't even know what people look at these days. You know, they look at EMAs, which is exponential. They put simple moving averages. They look at Elliott Wave. People do all sorts of different things, but for me, it's really I just look at price and volume and just try to create a bit of a picture as to where the strength is.
Yeah. How did you initially learn about these sort of indicators and whatnot? Is it something that you say like learned at university, or is it something that you just had to research yourself and pick up? How do people kind of get that initial knowledge of the momentum indicators kind of way of trading?
I feel like opening my cupboard because there's like a big library in here.
It's just books, yeah. Because that's what I did with long-term investing, is that I just read books by investors that had done it, and I felt like surely this can't be the way that people learn about this. Surely there's like a university course that you have to go to or something. But I've learned most of it just by studying the best investors in the world. Is that similar to what?
No, exactly the same. I mean, it's amazing what people share. It's an amazing community. People look at investing not as like, obviously it's there to make money, but it's actually there to develop you. And people are amazing. You know, the people that have taken the time to write books, the great investors that have just dedicated their time to educate others. And that's an amazing gift you can give people. So I take the time to read it. I just read whatever I can get my hands on. I remember going to the library and it was me and like 70-year-olds lining up in the investing section. You can't go to a library now, unfortunately, but there are some great books you can order. And look, it's just it's like anything. You can't be a brain surgeon overnight. It's the same with investing. You just got to put the effort in. Right.
Okay. So just learn what you can, and then just chip away at your craft over time.
Absolutely. So yeah, like it's just like anything else. You just got to work hard at it. I mean, I'm definitely not an expert, but I enjoy and I learn. I enjoy learning. So I assume it's the same as the people that are, you know, that your viewers and subscribers that are starting off. It's an amazing journey, and just to try and enjoy it and, you know, make it a lifelong craft, and you'll get a lot out of it. Yeah. Right.
No, I agree.
Well, I think we're actually going to wrap up in terms of time. So, but
yeah, that was good.
Yeah, no, it's just amazing to chat, and like, you know, honestly, just congratulations on everything you've achieved. Obviously, we've been in touch for a while.
Yeah, thanks very much, and you too.
Yeah, no, it's a long road ahead for both of us, but I'm happy we're doing it. So
it's exciting.
We'll be safe as well.
Yeah, you too.
Okay, cheers, Brandon.
All right, see ya.
Okay, bye.